Hey, what's up guys? It's Ezekiel Chiu here. So, have you ever looked at the charts, whether is it a bar chart or a candlestick chart, and felt like you were missing something that can allow you to read the charts better and obviously trade better then? Yes? So, today I've got something special for you. I'm going to share with you, hey, not one, not two, but three powerful candlestick patterns that can completely change the way you trade. So these patterns that I'm going to show you are not the specific candlesticks such as, hey, I'm going to show you the Doji, for example, where you're looking at one particular kind of bar. No. These three patterns are the main concept that will allow you to read the charts as a whole once you understand these three big candlestick main patterns. You're going to love this. Let's go. So candlestick patterns are powerful tools for building profitable trading strategies. We all know that, but using them obviously incorrectly can lead to losses. That's why learning to read these patterns are in a way very crucial. And there are so many candlestick patterns out there, right? So many different terms, different this, different that. So that's why instead of covering all that, which are good to know, obviously, I want to show you the main concepts on these three high win rate candlestick main patterns that you can rely on. All right, so I'm going to cover all three one by one. And once you learn all three, you will be able to read the charts like a pro. Yeah. All right, so the first pattern that you need to know, it's called the engulfing pattern. All right. First off, what is an engulfing pattern? Let's look at this chart. Instead of regular bars, right, you see candles. So this candles shows the price of whatever asset over a specific period of time. So the engulfing pattern is where the second candle is larger than the first one. It's called engulfing because the second candle completely, in a way, wraps up, swallow up, engulfs, whatever you want to call it, the first one. So if the second candle is bigger and green, it is a bullish engulfing pattern, signaling what? That the price might rise. If it's bigger but red, it is a bearish engulfing pattern, signaling what? That the price might drop. So the second color that engulfs the first one, the second one is the key. Okay? So in short, it is a candlestick that completely overpowers the first one, showing a potential shift in direction of the market. Why does this matter? It's this engulfing pattern. It's like the market giving you a heads up. The market going down, right? For example, then all of a sudden you see a bullish engulfing bar. It's like, hey, things may not stay the same way for too long. Right? It's like the market is dropping slightly, you notice a bullish engulfing bar, and then the second candle is green, which typically means that the prices are going up, and bigger than the first one, wraps up the first one, which is the red bar. It's a sign that the price might start going back up. So now, on the other hand, if you see the bearish engulfing bar, right, where the second candle is red, larger than the green one before it, it could be that the price is reversing to start dropping itself, right? So here's the thing, it's like a clue, but it's not a guarantee. So you cannot rely on, oh, whenever I see an engulfing pattern, it's like confirmed that it's going to work that way. No, you cannot rely on this pattern alone to make your trading decision. All right, so how do you use it then? Right, so seeing an engulfing pattern doesn't mean that you instantly jump into a trade, correct? So like a lot of beginners will say, oh, I see this pattern, right? Oh, Ezekiel said this. No, it's time to jump in. No. It's not that simple. You must combine the pattern with other strategies, right? So that you have confluence, a smarter, a more informed decision. Two crucial ones, for example, are the support and the resistance level. The support is like the floor, right? Where price tend to stop falling. There's a support level that holds it before it goes up, right? Resistance is like the ceiling where price tends to stop rising and then it comes down, right? So now let's go through an example. You can see here that the price has dropped to this point, right? And then it bounced back hard, marking this as a key support level. So as price comes down and hits this level again, look at what's happening. Notice how the candles are getting smaller and smaller. That's a sign that the momentum is losing steam. So then, a bullish engulfing pattern, it appears. So now, let's break down the bullish engulfing pattern here. Like what we talked about, right? The second candle completely covers the body of the first candle. So there's strong buying momentum at that moment, right? A lot of buying happening at that moment right now, right? That could mean what? A potential price rising. So after that, the sellers, initially they tried to drive the price down, right? Even breaking through the support level at one point. But then the buyers step in, pushing the price back up and even getting past that first red candle. So then you can wait for the next candle to form if you want a stronger confirmation. If it turns out to be another green candle, that's a good sign. So then it will be a great time for you to go for a buy position. Let's see another example. So here, you see that the price went up, hit a what? To the resistance level. Then it was pushed back several times before dropping, right? So then price returns to the level. And what happens? We notice a fake out. Price briefly, it breaks through the resistance, but then falls back down. Next, we spot a bearish engulfing pattern, which means what? The red candle completely covers and engulfs the previous green candle itself. So this shows what? That the buyers tried to raise the price multiple times, but couldn't, right? So the sellers keep coming at this point and driving the price back down. So this is a what? A solid chance to consider entering for a sell position at the area itself. Good. So you see, in this scenario, we didn't just use the engulfing pattern. We used with the combination of a strong support and resistance level. All right. So now this is the main concept, engulfing patterns. For the second candlestick pattern, we have the candle that you need to know. It's called the rejection candle. Ready? What is a rejection candle? Let's break this down, right? When you look at the charts, you see candles that show how the price moves over time, right? The rejection candle happens when one side of the candle has a long wick, a long shadow, much longer than others, for example, and much longer than the other side also, if there is. This long wick shows that the market tried to push the price higher or lower the other side, but couldn't hold it. And then the price turned around. So it's like the market tried to break through a price level, but couldn't, and then got rejected, causing it to reverse the direction. Why is it such a big deal? Rejection candles. It's like the market is saying, hey, I can't go any higher, I gotta go down, right? Or I can't go any lower, I gotta go back up, and then flipping the direction. So these candles are like super powerful, especially at key levels, like support and resistance level. It could be a moving average, it could be the Bollinger Bands, all these levels, it could be trend lines, whatsoever, right? When it coupled with strong levels, when a good rejection candle forms there, it becomes really powerful. When price reaches them, these key levels, right, that's where price tends to bounce. When you spot a rejection level at these key levels, it's like the market saying, hey, waving a big flag saying, hey, reversal may be coming. Keep an eye on it. It could be your next trading opportunity. How do you use a rejection candle? Right, so first off, just because you spot a rejection candle doesn't mean you jump straight into it. Like I said, this is a common mistake a lot of beginners make. A rejection candle is just like one piece of a puzzle, right? You need to combine it with other strategies so that you have a clearer picture of what's likely to happen. So here's the thing, trading is what? As you know, it's all about probabilities, not guarantees. There's no single pattern, not even a rejection candle, can predict the market with, say, 100% accuracy. So that's why you should always wait, right? It's a good idea to wait for other signals to confirm what is the rejection candle might be telling you. So you got to stay patient and trade in line with a plan. All right, but this is a strong, solid thing to add to your trading library itself. All right, so now let me give you an example. Let's take a look here. what happens? Price take a dip, it hits a certain level and drops, right? So here's the interesting part. Instead of hanging there, price starts to bounce back up. So then that's where we call it a support level. So what does it mean for you? It shows that buyers are getting involved, right? Pushing the prices back up, indicating what the market strength. So this is a good chance for you to enter a trade. So that's where we want to keep an eye on the level, right? When price returns to this level again, we see a major price rejection at that level in the form of a rejection candle. This means that the sellers initially push the price downwards, breaking that support level, right? But then the buyers came back in again and pushes the price back upwards, back to above the support level itself. So that's what does it mean? It means there's a lot of strong buying activity. It's like, nah, you're not going down, you're going back up, right? So for even more confirmation, that's where you can check the next candle after that itself. It is a big green one. So this green candle helps to confirm the reversal. So what happens now? It is a good time to consider entering what? A buy position. Yeah? Alright, so now another example. Here's another one. Check out this rejection candle in action. Right? So what happened? On the left, price hits the resistance level and drops. So that's where we place the resistance level there. Right? So then when price returns to the resistance level again, what we notice? We notice that the candle is getting smaller and smaller, showing a loss of momentum, plus a big rejection candle itself. So this big rejection candle shows what? Strong selling pressure at the resistance point. So this is a great spot to what? To consider going for a sell position. Here's a good tip. When trading rejection candles, look for longer wicks. Right? Longer wicks. The longer the wick, potentially, the better it is. The longer the wick, the stronger the rejection in that area itself. So rejection candles are like powerful, especially at important zones such as the support and resistance level. They are able to move the market big time. Good, yeah? For the last pattern that we are covering today, okay, listen up, listen up. It's called the shrinking pattern, okay? What is a shrinking pattern? Alright, so let's make this easy to understand. So imagine you're looking at the charts. Whether you are looking at the stocks, charts, Forex, crypto, commodities. Instead of lines, right, you see candles, right? These candles show how the price of that stock or that pair moves over a particular period of time. Whether you went up, went down, how far you moved. Now, imagine the candles, what happened? It gets smaller and smaller as they get closer to something important on that chart itself. This is called a shrinking pattern. So it's like, what happened? The candles are losing their energy or losing the momentum. So this shrinking is important because it tells you that the market might be slowing down and a price change could be coming. So what's the deal, man? What's the deal with the candles getting smaller? When you see a big candle, it means there's strong momentum. Right, like I told you, a strong momentum, lots of demand over there, lots of movement over there, right, behind the price move. Whether it's a big green one, whether it's a big red one, there's strong momentum over there. But when the candle starts getting smaller and smaller, it shows that what? The sellers or the buyers are slowing down. Things are slowing down. Here's the key. When you combine this with a strong support or resistance level, support is like a floor where price bounces back up, right? Resistance is like a ceiling where price can't go higher and might drop. So if you notice the shrinking candles near these levels, it is a sign that the market could be gearing up for a reversal, right? So here's an example. First off, price goes up to this level, drops back down. We draw the resistance line here. Price move back towards the level itself. You can see the candle, right? And then what happens? A smaller candle, and then an even smaller candle, and then a tiny candle with a long wick appears. So this signals what? An indecision in the price. That's where you can kind of expect a reversal happening there. But to further confirm, right, we want to wait for a huge candle to form. In this case, as shown here. So this becomes a good opportunity to what? Like a confirmation bar for a sell position. So you may think like reversal is coming, right? But you want to be sure. So that's where you can wait for the big candle to appear, right? Like this one, right? So that's where you can go in for the sell. Another example, another example. So on the left, price drop, reverses back up, mark this as a support level, price comes down to this level again, what happens? Big candle. Then followed by a smaller one, showing what? Loss of momentum. Followed by an even smaller candle, approaching near the support, indicating what? Loss of momentum. Then a huge green candle pops up, showing what? Strong buying pressure, confirming the reversal pattern. This is what? Your perfect chance to consider a buy position. So now, before we wrap up, remember, you can indeed learn a lot. And I'm sure like through this, right, you can see. So you see what is the key right now. The key is we have covered the three main concepts. But first off, we show you the marking of the levels. Right? You don't just want to enter all these bars, like constantly finding and searching for all these bars. No, you don't have to do that. What happens is add the key levels. That's why we plot all the key levels, right? Add key levels, whether they're support resistance level, whether they're Bollinger Band, moving average, whatsoever. Add key levels when you spot either of these three categories, right? The engulfing, the rejection, or the shrinking. This indicates that and increases the probability of price bouncing off that support or resistance or whatever level that is. That's where you will now know a move could be coming itself. Get it? Get it? This is why understanding these three general main concepts are so important itself. Good? All right. So now, let me wrap it up. I'm going to give you one final tip. You can use all this candlestick pattern. Now we talk about all this support and resistance level, moving average, etc. Right? You can also then combine them with other stuff like what moving average, the RSI, stochastic, the MACD as confirmation. So check out my videos for them so that you can increase the probability at all these key levels itself. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.